Ladies and gentlemen, welcome. This is Christopher Aaron. It's the 1st of June, 2016. We will be looking at gold and silver. And please excuse me, I do not have my normal microphone today because I am suffering from a back injury related to my time in the wars, and this acts up every once in a while and forces me to be a little bit immobile for the day. So I was unable to set up my typical recording studio. But I am bringing this to you on the evening of the 1st, and we are going to look at a setup for silver, for a trade that I see developing. This is something that I would typically reserve for the subscribers to my premium service. But this is the first real significant trade setup that I see developing in silver over the last few months. And I decided that I would share this one. This will likely include a series of shorter videos released not on Wednesday, but basically at any time over the next several weeks. They will be shorter, a few minutes long, where I bring the latest up-to-date trajectory for the trade setup as I see it happening. But I'm going to explain that today based on what we're observing in the markets, especially for silver. And this could be a very powerful trade. I know there are all sorts of investors here. There are long-term stackers. There are more medium-term investors. There are individuals who are interested in the gold and silver mining sector. And then there are also individuals who like to do trades for short-term profits from time to time. And I consider myself a member of all those groups. And so I do like to bring these types of opportunities occasionally when I see them. Please stay tuned because this could be a very powerful trade here that we see developing if you have some risk capital that you are comfortable with that idea. I want to start off this week by looking at this idea of embedded patterns. And we see that these patterns exist in nature over and over and over again, and that nature, in fact, is not random, but does follow a series of patterns that are, in fact, when we look at them, observable to human beings, and they are able to offer us some clues as to how these patterns are going to manifest into the future when we look at the past trajectory of these patterns. And so we apply this principle to the setups that we are seeing in the markets. The markets, of course, being the sum of human nature, which is a component of the broader spectrum of nature as I see it. And if you disagree with me on that fundamental principle, that's okay. We don't have to agree on every single thing, but I would tell you that my form of analysis is highly based on these repeatable patterns that we can see over and over again through time in nature and in the markets. As we turn to these two elements of nature, gold and silver, and we start by looking at the micro, we are looking at the 3-day action for the price of gold and silver, at least as it trades on the spot market. And we are observing here that we had weakness continuing into the end of last week, and basically starting with the holiday, the shortened holiday trading on Monday due to the Memorial Day holiday here in the United States. We had essentially flat action over the last few days, closing still above 1200. Note that the price bounced right at that key psychological level of 1200. So we will put that into perspective very shortly here. Let's just flip over to silver and see if we can notice any differences in the short run for silver. A bit of a extra breakdown in silver that we saw today, one of these V-shaped spikes lower. This will appear on the daily charts as a hammer candle using Japanese candlestick analysis. And these V bottoms can typically mark short-term reversals when we look at this and then put this into a broader perspective. So does this mean this today was the very bottom for the silver correction that we are seeing? It could be. This is not yet certain. However, this certainly has the potential to form a bottom here. Should prices stabilize and begin to rebound over the next few days, this very well may have been that V-shaped bottom. But let's put that into perspective here. Let's look at gold. This is the 1-year time frame, and we bring up our handy key here for the color system. If you are new to the system of analysis, I color code everything, and I try to keep the colors basically the same through most of my slides so that your eyes can learn to identify the major trends and the major patterns that are in play at any one time. So what have we seen here in gold when we take this to the 1 year, 1.5 year time frame is that the price has negated the trend that was developing since early February. If you follow my mouse here and you see this up, down, up, down, up, down, that formed a trend, at least in the short run, that has been negated. So we then, when we have a negation of a trend, which happens, of course, all trends have to come to an end at some point. The question is, can we identify when a new trend is developing and what that turn is going to look like? And what is the difference between a short-term trend and perhaps a longer-term trend that is developing? So in the breakdown here from gold that we saw below 1240, which marked the bottom of this short-term uptrend, we then have to take a step back and look at other forms of analysis. How else can we view this market to try to gauge where the next level of support is going to show? Technical analysis is really about identifying likely possibilities. And if we have a confluence of likely possibilities, it gives us a high probability expectation. Now, I would argue that in life, as in nature, no probability is 100%, except perhaps for the knowledge that we are all going to die one day. However, we don't plan on that today or tomorrow. We reasonably expect that by tomorrow we will be able to continue with our lives today. And so we do not plan, for example, on the price of gold going to zero, because that has never happened in the history of gold. Gold has always maintained at least some value. So as we are looking at these patterns developing here, and we are saying, how else can we analyze the gold market now that this important trend dating back for 2.5 years was broken to the upside in February, and we see this consolidation sort of sloping upward that has now broken down. So what are some additional data points that we can look at to try to gauge where this short-term decline might find some support? So I have drawn these Fibonacci retracement lines. They're very faint, but they appear here in silver. Now, the Fibonacci retracement lines, of course, are these patterns that appear in nature. And the levels that I pay most attention to are 100% of the move in question. The move in question being the low, excuse me, we advanced there too quickly, the low to the high. So the low 1045 to the high of 1306, plus or minus $1 here. And when we measure from the low to the high, and then we add these Fibonacci retracement lines at 100% of the move, 61.8% of the move, 50% of the move, and 38.2% of the move, we have a confluence of levels here that gives us some expectation as to where we might see gold find support. These Fibonacci lines, of course, show up in waves and seashells and flower patterns, as we have seen, and they also show up in the gold market, as crazy as that might sound to some people. So we are looking at the potential, for example, the 61.8% of the impulsive move higher that we saw. That retracement came right here at 1207. So 1207 was very close to where we saw the bounce today. We are looking at the Japanese candlesticks here. If we zoom in right here, we see this support zone, a hammer forming in the lower region of this decline, which is typically a short-term reversal pattern right at the 61.8% retracement level. So what we were saying is we have this as a potential support level. Immediately below that, we find the rising uptrend, which a few months ago in February, no one really wanted to pay attention to. This was sort of still hanging way back here in March and April, and it was sort of, well, how could the price ever come back and meet this? Well, look, lo and behold, this uptrend is getting very close to meeting with our price here, somewhere in the 1200, 1195 region currently. Below that, immediately, we have the 1190 support from October, which was resistance back then, and when broken in February, should now act as support if these buyers who helped to overcome this price level are going to show up again. So it's about looking at who showed up at various times in the market and saying, we believe these individuals will be showing up again at this 1190 level. Immediately below that, we have the 50% Fibonacci retracement level, which comes in right around 1176 US dollars per ounce. So in sum, we show this green shaded zone here, and we are looking at between 1207 and 1176, a $31 swath where we have these 1, 2, 3, 4, almost 5, if we want to call this a range here, these 5 important technical support levels. And it gives us a high confidence zone that this correction is going to find support in. So we're just seeing the top of that now. That does not mean that the absolute low is in place. There could be some continuing weakness here, perhaps a violation of the first support level and some support found into the second support level. Most data points that I show when I look at these charts are telling me that this will be the support level that we find for gold for this retracement, which would fit, mind you, very nicely with the seasonal patterns, the weakness that we typically see in May, June, and July prior to what is typically lows put in right around July, about a month from now, and then a resumption of some strength seasonally late July into August, September, and October as demand from India and China picks up. So that is what I'm seeing in the gold market. Now, switching over to silver, as we look at the 1-year time frame once again, we are just noting the weakness that we've seen in silver has come right back down into the lower range. It's spiked below the lower range of our support zone. Of course, we always look at these as zones and not specific absolute lines because that would just be too strict for nature. And we have silver's own uptrend here forming since the lows in early 2016 that we are getting very close to hitting right now. So I'm going to zoom this out, and here's where we're going to really get into the study of some of these patterns and the trade setup. that I see forming for silver. And so again, what I'm saying is that if you have some discretionary capital, some money that you like to speculate with and try to hit a short-term trade that could net a significant return, here's where we are seeing this setup right now. Now, we have a series of embedded patterns here that are forming in silver. And we are showing these in two different colors. The royal blue that is being shown as the bottoming inverse head and shoulders pattern that was already confirmed. We're calling this a level 1 inverse head and shoulders pattern here, number 1. Now, a few weeks ago, we mentioned this from the potential of the embedded head and shoulders. We talked about this, this was 2 or 3 weeks ago. And we're seeing some more detail on this as we look at it right now. Now, let's look very carefully at this. Excuse me, my mouth was dry, thank you. And as we're looking at this, I've already drawn in the left shoulders of what looks like this embedded head and shoulders pattern. That's shown here in the magenta. We're calling this a long-term trend line because this is really going to be a multi-year pattern that is setting up, and we need to pay very close attention to this. This has a lot of ramifications for the silver price going forward. So what is this going to look like? Now, the potential here is that this series of waves that we see here below the $18 price level was in essence a larger double left shoulder. You can see that here. This first swoop down in 2014, the second swoop down in 2015. Okay, so we're calling these almost like two larger left shoulders. Okay, so what that means is that this entire head and shoulders pattern here was essentially one larger head. I've added that to the chart right here. This pattern below the 1625 region here being one larger head. So what that means is clearly we can see here the price is backed off at $18, right? I mean, this is the same level that was hit in May of 2015, being hit in May of 2016. The price is backed off, and we are now into the lower, just dipping below the lower range of the support for this anticipated region here of support. And we've clearly backed off in a very similar way as the price backed off here and here. So what we are anticipating now, if you agree with some of the other patterns that we mentioned 6 months ago, the bottoming wedge pattern that is shown in the turquoise color, for example, and if you note the volume pattern that came here on the breakout of the head and shoulders, what we are seeing form right now is the very first of the right shoulders on the larger head and shoulders pattern. Now, if this is correct, and I am willing to wager on this, and this is going to have to do with the trade setup that is going to be coming, and I do not encourage you to trade this just haphazardly, because it's quite possible for trade setups to fail. So you really have to keep a firm eye on this and know what you're doing. But if you're correct on this, and this is forming a right shoulder on this, there is going to be a significant move for silver coming over the next 1 or 2 months. And in fact, beyond that, if this pattern is going to stay symmetrical, which I'm willing to bet that it will, we will actually see another slightly sloping higher shoulder here, just like we saw form for this shoulder of the main blue pattern. Now, this would essentially have two right shoulders in the same way that there are two left shoulders here seen. and this entire thing from October, September of 2014 all the way to essentially the beginning of 2017 would be one massive bottoming inverse head and shoulders pattern. A very significant basing pattern for a move to come over the next several years. Essentially, all of this action below here will look like a little blip on the chart in the long term when we back this out. But we are very focused on this as the intermediate term action right now. So if we look at the time horizons for this and we start to observe some of the symmetry setting up here in silver, and we look at the first left shoulder that formed here in silver being roughly 4 months from late September through late January 2015. And then we look at the second shoulder that formed being roughly 4 months again. And then we look at the head that formed under $18 that was just hit. And we see that this is 12 months, almost exactly to the day. And we see the retreat that we are in right now back into the very lower regions of the support level. What looks like to me is setting up here is another series of 4 months and 4 months. And each one of these moves here will be very tradable, and we will have other confirming indicators for these moves. Now, when the entire thing breaks later this year or perhaps at the very beginning of 2017, what are we going to be expecting based on this bottoming pattern? It is a move in silver to roughly equivalent with the former resistance here from early 2014 at a minimum. Somewhere in this region, 22, 23 would be a better target, but I do note this resistance here, and I would be more comfortable calling this a target of 2150 to 23 in that region. Regardless, it's going to be another significant surge setting up. Once again, based on patterns, based on a confirmed bottoming indicator, based on what else? Proprietary indicator that I use. I mentioned this last week and we're going to expand on it, is the relationship between the companies that mine for silver and the price of their primary product itself. And if we simply do a quick comparison here, as we look at Silver Wheaton on the top, we look at silver as represented through the SLV paper fund in the middle, and the bottom we look at silver actual bullion prices here on the bottom, all over the same time scale basically since the last year, since last July. Just follow my mouse here. Notice as we were rounding out the beginning part of this bottom, Silver Wheaton had a reaction higher. Look down below and notice that SLV had a reaction higher, and silver had a reaction higher. These correspond fairly well on this chart if you look straight up and down. Now, starting from the actual bottom, late December, early January, Silver Wheaton has shot up over 100% since the bottom. Notice clearly exceeding its reaction high from October. Clearly exceeding it. Look what happens when we move down and look at SLV and silver. SLV and silver have fallen back to the level of their reaction high from last October. Silver Wheaton, whose profits are largely derived from the price of silver, and a relationship that I've been observing on a daily basis for the better part of the last 10 years, is significantly above its reaction high still, and is refusing to break down thus far with each sequential breakdown in the price of silver. What this is telling me is that silver is getting ready to rebound. And this would fit in well with our model of a right shoulder forming in silver in this vicinity. And these rebounds, when they come, will be very quick over the course of just a few weeks, perhaps gaining $1 or $2, and perhaps doing that same thing again later on in the fall. So, how to play this, how to do this trade will be the topic for another video that I will release basically in real time as I'm making the trade. And I will give this one away for free if people want to follow it to one extent or another. It will probably be using paper to make the trade, either the SLV or futures or options, depending on the amount of leverage that you are comfortable with. And then what you do with those paper profits will be up to you. The reason we do not trade the silver bullion for a move such as this coming up is because the premiums of above and below spot are typically too significant. They eat away too much into your capital. Unless you participate in a program that lets you easily store your silver in a vault or something like that where you have very low premiums. Otherwise, I do not recommend considering this with physical metal. Physical metal is much better to buy on a regular basis, continue to stack for the move higher that has not even begun. You're still in the initial moves of this, but some of these opportunities do appear from time to time, and I would like people to be able to participate in them if you have that additional tolerance for the risk, because of course one out of every several trades will fail, and we build in that tolerance and we cut those losses short so that they don't eat away too much of our capital. So thank you again for watching. I will bring you those videos in real time over the next several weeks as I see it setting up. And hopefully by the next video, a week from today, I will have my back in better shape, and I will better be able to record the video from my primary studio. Excuse me, June 1st today. Thank you again for watching. Have a nice evening.